All right, so usually I don't make topical videos like this. I usually try to make stuff that's going to be evergreen and relevant to all my consumers in the future. But I know, there's a lot of buzz about the 50-year mortgages and the portable mortgages right now. President Trump and his Federal Housing Finance Agency director, Bill Pulte, they've been coming out and talking about obviously ways to try and help people get into more homes. So first I'll start with a 50-year mortgage. Number one, I know, it's going to end up being on an amortization table, a lot more interest to pay over the life of the loan. But just like with the 30-year mortgages, people don't wait for 30 years to pay off their loans. They don't pay the minimum every single month and then wait until the 360th payment to finally pay that off. In the vast majority of cases, people start paying those loans off faster when they have more money. Their income grows in the future, or they receive an inheritance later on. They have other assets grow over time, and then they can just knock out that mortgage, the remaining balance, just in one payment. Now, if there were 50-year mortgages, I really only see a 50-year mortgage as just like a last-ditch effort to get people qualified to be able to cover their payment. It will decrease the principal and interest payment by a little bit, but not a lot. I mean, as you can see here, this example with got a $400,000 loan amount, 6.5%. If it's at a 30-year term, the monthly payment's going to be $25.28. At a 50-year term, it's going to be $22.54. What is that? $275 roughly. So, and also you got to pay for the taxes and insurance. So even though that's about like a 10% cut there, there's still more to the payment than just that. And also, if you do allow a 50-year term, and it's going to allow more people into the market that otherwise wouldn't have qualified. So it brings more people into the market that would marginally raise home prices a little bit there. Then there's the issue of the portable mortgages. This one's more a pipe dream. I don't see this one being really usable. It's not usable at all right now. What a portable mortgage in theory is being able to take your low interest debt that you have on one home and then carry it over to another home loan. Right now, what you have is you sign up for a mortgage on one home, and then if you want to then go buy another home somewhere else, you have to close your current loan out and then go apply for a new mortgage altogether on the new home. Let's say you have, a really low rate on your current house, and if rates have gotten more expensive in the meantime, let's say you've got a 4% rate on your current house, and then let's say interest rates have risen to 6% when you want to go buy this new house. Instead of getting a full new mortgage at the new 6% interest rate, it would, in theory, allow you to take that 4% load of debt and transfer it to the new house. Well, you can't do that right now. There's rules that you abide by when you sign at closing. You're signing on a mortgage statement. The investor of that loan, Fannie Mae, Freddie Mac, the FHA, or whoever they transfer that loan to, the investor rights in the future, they're not going to just let you go willy-nilly take that low rate somewhere. You got to close these loans out and open up new ones, just like with refinances. You can't just wave a magic wand and go willy-nilly and drop the rate when the rate falls. Usually you got to qualify for that all over again. You got to close your loan out, even though it's on the same home. Show you got a good credit score still, show you that you have income that still qualifies to cover the payments on the house, show that you still have equity in the home. On a traditional, let's say conventional refinance, the streamlines, you don't have to do all that, but you're still paying closing costs on the streamline and a conventional traditional refinance. But these portable mortgages might not be enough to cover the new mortgage that they would need. So you would need, in a lot of cases, like a second loan to cover the difference. Those rates are not inexpensive. You would need also that current lender to be able to sign off and be willing to let you move that over. I mean, even if that was a thing, they're not just going to let anybody move over any debt to any home. There's going to be a lot more restrictions in theory on that too. because they see a lot of risk in moving debt over. But like, that's why they're not even going to let you do that in the first place right now. So, but anyways, that's more complicated. It's maybe something you want to ask me about offline. But portable mortgages, will they be a thing? Don't count on it. And your folks that already have these super low rates from COVID right now, they're not going to be able to move those out either and make those portable, because they signed on their loans on their closing days when they refinanced or purchased or whatever, however they hold that debt right now. There was no clause in there that said that they could move that debt over to another house. That does not exist. So that's not a thing right now. If it could be a thing in the future, great. But I don't know, I guess we'll have to keep on checking and seeing what goes on there. But guys, if you have not watched my first time buyer playlist, you've never purchased a home before, I highly recommend you go there. It's where you ought to start. 30-minute first time buyer playlist. Just going to teach you everything I'd want to know if I didn't know any of this myself. And look forward to seeing you on the next episode. Thank you.